And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick taking you through to that closing bell. It's a global simulcast. Carol Massar and Tim Stenovec, they join us now. Welcome to our audiences across all of our Bloomberg platforms, television, radio, our partnership with YouTube. A little bit of a sentiment shift here on the day, Carol Massar. Coming off the record highs yesterday, we are modestly lower for most of the major indices that we should just flag for our viewers and our listeners. We are going to get some major earnings coming down the pike in just a matter of minutes, including from the best performing stock of the year, Sandisk.
Yeah, I'm looking forward to that. Western Digital also coming out with earnings. You've got Expedia, eBay, Duolingo, Elf Beauty, Honeywell Aerospace, DoorDash. I mean, there's a lot.
You didn't say AppLovin, did you?
AppLovin?
You didn't say AppLovin.
I didn't. I left that for you.
Oh,
Yeah,
wow.
AppLovin.
That's because I'm loving you, and I'm giving you AppLovin.
Oh, see, Romaine?
Wow. Get a room, you two.
The love over here.
No, we're like,
Well, you're actually in a room, but all right, I got you. But we get to this idea of the earnings season. I know, look, so much hay has been made of the AI trade.
Yeah.
You were sitting here yesterday when AMD and SpaceX crossed the wire, and we're going to hear from Sandisk, a stock that's just took a beating last month, down 50% in the month of July, still up like 400+% on a year-to-date basis. But it gets to this idea of just how much risk appetite is still there for some of these high multiple names.
agreed. So we will watch, and we will be breaking them down in just a moment. But we've just got 20 seconds, and will it be a record on the S&P? Doesn't look like it's going to be that way, Romaine.
Yeah, it looks like the S&P fading into the close here. It had been holding right around the waterline for most of the session here, but now down almost 14 points. It looks like that's where it's going to settle. That's going to basically be down about 0.2% on the day. The Dow Jones Industrial Average, which closed at a record high today, adding about 260 plus points, or 0.5% today. So that is another record high. The Nasdaq Composite and Nasdaq 100 each down about 0.8%, and the Russell 2000, Carol, losing about 18 points, or 0.6%.
Almost an even split in the S&P 500. In the S&P, we had 245 names move higher, 256 names move lower today.
Yeah, and we talk about sort of what's been leading the market. Yesterday, on the sector basis, it was all tech. Today, it was materials up 1.5%, healthcare up 1% on the day, financials up 0.2%, and then everything else just faded. Technology stocks as a group basically unchanged. Communication services down 2%. And that big part of that was the big downdraft that we saw in Alphabet.
All right, guys, let's get to some of the individual gainers as we await some earnings. Nvidia, that stock up 3.4% off its highs, but nonetheless a gainer on this Wednesday. That company, as I mentioned, up more than 3%. Stock gaining after SpaceX said it would exclusively use Nvidia AI chips. SpaceX expects to have approximately 2 gigawatts of computing capacity by the end of this year, could rise to as much as 10 gigawatts next year. That's its projections. Nonetheless, that gave Romaine a boost to Nvidia. The stock up roughly 17% year to date.
Yeah, a little bit earlier, we got earnings out of Booking. Those shares rallied 12% on the day. We're now hearing from one of its competitors, Expedia. Those shares slightly higher in the after-hours trade after the company said gross bookings in the quarter did come in slightly above estimates at $33.93 billion. Revenue, $4.32 billion. That's also a beat. Adjusted EPS, $5.76, and that is a beat. Here's your guidance for the full year. The company says expect revenue of $16.05 to $16.22 billion. That is a raising of their guidance. Their previous guidance was 15.6 to 16 billion. So basically a beat and raise quarter for the company as you see the shares just slightly higher, up about 1.5%.
Yeah, the stock's actually up about 12% year to date. Looks like it might be actually in the regular session, maybe closing at a record high, but nonetheless, we did see it hit a 52-week high in today's session. Again, investors liking what they heard from the company, up about 5% here now in the aftermarket. Second quarter adjusted EBITDA, 1.12 billion versus 1.04. And then in terms of the outlook, just to go back there, sees third quarter revenue 4.65 to 4.75. And Tim, that is a boost. Estimate on the street was 4.66 billion.
Yeah, for Expedia Group, shares up 4.8% right now. Ariane Gorin, the CEO of the company, she said, quote, "We continue to strengthen our marketplace through more personalized consumer product experiences and expanded supply across our business while leveraging AI as a force multiplier to innovate faster and operate more efficiently." I guess I want to know more details about how they're using AI and how it made them more efficient. I think people could say, okay, well, the conversation is starting to shift from these companies now adopting this technology and making them more efficient. So where does that show up on the bottom line?
All right, we're going to wait for some more earnings. I'm going to go back to some gainers. Shopify, have to mention, at its highs, up almost 25% today, finishing the day with a gain of about 17%. Number one gainer in the NASDAQ 100 today, the highest level since January. The e-commerce giant reported third quarter revenue outlook beating expectations, strengthening the view that it faces limited disruption from artificial intelligence. Revenue is seen growing at a low 30s percentage rate, ahead of Wall Street's expectation of a 27% jump. It would mark the sixth consecutive quarter revenue growth exceeding 30%. Keep in mind, the stock has definitely been under pressure. It had fallen 23% this year through Tuesday's close. Stock now still down about 10% amid concerns about AI disruption, but maybe easing some of those investor concerns remain.
Block, XYZ, Jack Dorsey's company, out with its earnings. Second quarter revenue does appear to be a beat, particularly with its Square segment revenue. But the redhead has to do with their third quarter forecast. The company says operating income for the current quarter will be $875 million. That's above street estimates of roughly about $866 million. The company also says that for the quarter, it expects gross profit of about $3.13 billion. That's just a nudge higher than what the street was looking for this particular quarter. The company also providing some full year guidance. It's also just a smidge above analyst estimates.
Yeah, absolutely. Just going through the snapshot here, you mentioned some of the highlights. Just looking for some commentary here. So again, sees adjusted operating income for the third quarter, $875 million. The estimate was $865.7. Sees gross profit of $3.13 billion. The estimate is for $3.12, so a little bit better. And again, seeing adjusted operating margin of about 28%. Tim, that stock bouncing around in the aftermarket, now unchanged, but we did see it a little bit higher earlier on.
Remember, this is the company that a few quarters ago shocked the markets by massive layoffs. A lot of people in wake of that said, okay, well, it was because of overhiring that happened during the pandemic. But again, going back to what everybody's looking for, okay, did AI replace these employees? Is AI making the company more efficient? Shares of Block, initial reaction now up more than 4% in the after hours.
All right, well, we're starting to get some numbers trickling out here right now for Western Digital, the company that now wants to be referred to as WD, one of the big memory storage device makers. The company says that net revenue for the quarter did come in at about $3.75 billion. The street on average was looking for $3.68, so that is a beat. Adjusted EPS coming in at $3.56 a share. The street was looking for $3.31. This release is a bit of a beast to parse through, but you see the reaction in the shares there. They're down about 12%. So the numbers for the most recent quarter did beat, but clearly something else in here that investors are focusing on, and it might have to do with the forecast. The company says that for the current quarter, which is its fiscal first quarter, it expects revenue of $4 billion to $4.2 billion. The street was looking for $4 billion on average, so the low end of that range, pretty much on the nose of what the street was looking for. The company says gross margin in the quarter will be 56%. The street was looking for 53.8%. The company says operating expenses in the quarter will be lower than what the street was looking for.
What's the problem?
At $390 to $400 million. And adjusted EPS in the quarter will be $3.85 to $4.15. The low end of that range above the average of street estimates.
What's the problem?
High expectations?
Yeah, well, the stock's up more than 200% year to date. So I would definitely go into that. I mean, again, going to some of the outlook here, the company sees first quarter adjusted gross margin 55% to 56%. The estimate was 53.8%. So that's, I would say, upbeat there. The company sees first quarter operating expenses, looks like they're reining them in a little bit. $390 million to $400 million. The estimate was for $475.3 million. And then Western Digital sees first quarter adjusted EPS $3.85 to $4.15 a share. The estimate on the street was $3.83. So this is I got a little head scratching here.
But the company commentary from the company's CEO, now, as Romaine mentioned, WD is how the company wants to be referred to, Irving Tan, it says that that they have confidence in demand. He says, quote, as global data creation continues to accelerate, we enter fiscal year 2027 with continued confidence in the durability of demand and with increasing visibility into our business. With our scale, technology leadership, and operational discipline, WD is well positioned to capitalize on the secular data growth opportunity and deliver long-term shareholder value.
I just want to point out real quickly.
Yeah,
we are still waiting Sandisk, and I should point there is a ton of trading activity going on in it right now. Those shares are also down about 8%. The release has been posted on the company's website. We have not yet gotten it on the Bloomberg terminal, and we should also point out that the files on the company's website right now not actually coming up here. So it's not clear whether people have actually seen the numbers just yet and are reacting to that, or whether they're reacting to what they heard from Western Digital. Of course, Western Digital, the company that spun off Sandisk last year.
We've got it on the terminal now. Sandisk fiscal fourth quarter revenue was $8.97 billion, up 51% sequentially. GAAP net income reported at $6.9 billion. Sequential revenue growth came approximately 1/3 from higher volumes and 2/3 from higher pricing, which is always great for margins, but it's something to keep in mind in terms of when we look through these numbers. Fourth quarter non-GAAP diluted net income per share was $39.25 a share. So we're just starting to get some stuff here, Romaine.
Yeah, I'm going to hold off just a little bit here. I'm not quite getting all of those on my terminal as well, but you see the reaction. And it gets back to this idea that you were getting at, Tim, this idea of high expectations. Of course, Western Digital had been on a tear, but Sandisk had been on even a greater tear here. And it raises a lot of questions as to exactly what actually constitutes a real beat in this day and age.
Well, yeah, we got Jake Silverman coming up. He covers semiconductors for Bloomberg Intelligence. He's going to be joining us. But look, the backdrop is that their demand is high for this stuff. Look at what the stocks have done so far this year. Look at what Apple has had to do as a result of higher input costs, raising prices for certain items. The question is, how long does that demand go on? And is there actual competition from China that U.S. companies can have access to?
Just going through Sandisk a little bit more, expanding their share repurchase authorization, approving an additional $14 billion buyback, bringing total remaining authorization to $15.5 billion. But you're right, we're looking for some comparisons here. But I'm always a little suspect, too, going back to who were we talking about? Was it Western Digital cutting their CapEx, and why? When it is reined in a little bit, why is that happening? All right, guys, that is a wrap. Sandisk down just shy of 5%, now 5% in the aftermarket.